Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Caliber Home Loans. At Caliber Wholesale, our products make us different, and our people make us great. Caliber Home Loans Incorporated is an industry product leader with a full offering of core conventional and government products, coupled with our innovative non-agency portfolio lending products. Contact us to learn more.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network, and it's brought to you by our friends at Caliber Home Loans. So this week is going to be an interesting week. We get some news on inflation that the Fed wants to watch carefully. We're going to see a GDP, and we're going to get some more housing data. When we take a look at the data that we got last week, it was pretty darn good regarding housing. You know, the existing home sales report, which measures closings, and this report was for the month of January, closings for the month of January. So that means that people were looking at purchasing homes and signing contracts in November and December. That's after interest rates had moved up, was going to be a real test for the housing market. So how did the housing market fare with rates rising? Were the purchases still strong out there? Were buyers still interested? Did they get scared off by higher rates? Well, this was an amazing report pretty much on all counts. It exceeded expectations. December's report was pushed up higher. First-time home buyers increased in numbers. And home prices on a year-over-year basis went up over 7%. The amount of sales was the best amount of sales in over 10 years. So now when we take a look at this overall report, and in contrast, the media's bashing of the housing market for so long and trying to pick anything they can, what we have to get out to our customers is that, yeah, it is a bit frustrating because inventory levels at their current rate, at their current level of 1.6 million homes for sale, it's the lowest that we have seen since the 90s. Okay, so yes, it is harder to find a home. We understand that. Yes, sellers are less willing to negotiate, but it may pay to even pony up a little bit over asking price if we take a look down the road at the fact that this housing market has a lot of strength going forward. We take a look and see, just as you can on MBS Highway, at the forecasted rates of appreciation in your local market. You'll see that 4, 5, 6, 7% appreciation over time can be pretty dramatic as far as the wealth it creates. And the fact of the matter is not very many people look at that. A lot of people look at, oh, what's the rate going to be? And they get tied up in the minutia of what they're accustomed to seeing instead of what they should be looking at is the big picture of how this home can create wealth for them. And maybe the trade-off of having to settle for a home, or maybe the trade-off of having to pay full asking price or even above slightly asking price is worth it if they are able to see the big picture. You, as the professional mortgage representative, need to be able to not only get their transaction done, get it done timely, explain everything to them, but also really illustrate the opportunity that exists in housing. That'll set you apart from everybody else. Now, other news that we're going to see this week is inflation via PCE. The Fed likes that. Now, Fed released their minutes last week, and they talk a good game, and they said that hiking sooner than later may be more beneficial because then if we fall too far behind the curve, what could happen is that they might have to move more rapidly. That could really disturb the markets. Yeah. We've heard it before. Fact of it is the thinking is right, but the makeup of the Fed is very dovish. They're pretty spineless, and it's difficult for them to actually pull the trigger on a rate hike, as we've seen for the past couple of years. The way that the stock market has behaved, the way that the economy is behaving, the way that we are seeing the overall situation globally, interest rates should be, from the Fed's perspective, much higher than this. You could argue that they should be 2% or 3% on the Fed funds rate instead of 0.5%. So is the Fed behind the curve? You bet. Will they catch up? Who knows? But we have to be careful that one day they catch up rapidly, and by catching up rapidly, that starts to disturb things. But one thing the Fed did say is that they said that they are going to eventually sell off their holdings in mortgage instead of reinvesting them or let them run off. Right now they're reinvesting. We've talked about this, but they don't intend on doing that for some time throughout this year. So it could be safe for this year, but when that happens, that can kind of spoil the party a little bit at interest rates. All right, we'll keep you posted on all this stuff. Like I said, it's going to be an interesting week. One thing I want you to look at, the 10-year Treasury, look at 2.31%. We get under 2.31, it's going to be very interesting. You'll see a big drop in rates, but we have gotten a little bit of a rally at the end of last week. Let's see if we can hold on to it. Don't get too optimistic unless we break underneath 2.31, because we might drop down towards that level and then see it bounce higher. That's going to be a real line in the sand. Let's watch that carefully. All right, have a great week. See you next week. And by the way, sign up for MBS Highway, will you? I mean, you're in a big money business. It's very, very cost effective. You need to be able to do more transactions, be the best resource for your customer. We help you do that. Go ahead and sign on. Talk to you soon.
Your reputation with your referring business partners depends largely on the lenders you recommend. This is why you'll want to choose a partner who shares your commitment to customer service. At Caliber Home Loans, our products make us different and our people make us great. I'm a leading product innovator. In addition to our core conventional, government, and jumbo loans, we've created our own non-agency portfolio lending products. These enable you to assist creditworthy clients who can demonstrate the ability to repay. To learn more, visit us online at caliberwholesale.com.
This is Mortgage News Network.